This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. The energy markets just received a massive geopolitical shock to the system. Let's get you caught up. The 60-second commodities flash. Trump extends the blockade. President Donald Trump told Axios he will not lift the naval blockade of Iran's ports until he secures a deal to address the country's nuclear program. Furthermore, the Wall Street Journal reported that Trump has directed his aides to prepare for an extended blockade of Iran. Brent surges to $126. The oil market is on fire. Brent crude for June delivery climbed 7% to $126 per barrel, reaching its highest level since mid-2022. U.S. West Texas Intermediate, IWTI, also surged, hitting $110. Analysts at Nuvama are warning that a prolonged closure of the Strait of Hormuz could push crude prices into the $110 to $150 range. Gold dips on hawkish Fed. Spot gold is trading slightly softer near 4,544 OZ. A firmer U.S. dollar and a divided Federal Reserve are pressuring the precious metal as Middle East uncertainty continues to fuel deep inflation fears. Copper hits 3-week low. Dr. Copper is flashing red. London copper hit a 3-week low today, weighed down by a powerhouse U.S. dollar and mounting concerns over a global economic slowdown. U.S. becomes net exporter. In a historic shift, the United States became a net exporter of crude for the first time since World War II. The U.S. has shipped a record volume of oil to refiners scrambling for supplies after the onset of the Iran war, leading to large drops in domestic inventories. Deep dive, the extended blockade and the global liquidity squeeze. The hottest topic, Trump's decision to maintain the naval blockade. The market was praying for a diplomatic thaw, but President Trump just doubled down. Extending the naval blockade until a nuclear deal is secured doesn't just squeeze Iranian exports. It acts as a massive tourniquet on global trade liquidity. Here is why this extended standoff is radically altering the financial mechanics of the commodity markets. 1. The $150 oil risk premium. We are no longer looking at a temporary disruption. With Trump preparing aids for an extended blockade, the $126 Brent price we are seeing today is being driven by a massive, sustained war premium. When a critical choke point like the Strait of Hormuz, which carries around 20 million barrels per day, is permanently contested, maritime insurance markets effectively freeze. Banks become entirely unwilling to issue the letters of credit required to finance Gulf shipments. Nuvama's warning of $150 oil isn't just about physical scarcity. It represents the exorbitant cost of trying to financially clear trades in an active militarized zone. 2. The end of just-in-time liquidity. Global supply chains are shifting from just-in-time efficiency to just-in-case survival. The fact that the U.S. had to ship record volumes to allied refiners scrambling for supplies proves that the buffer is gone. When domestic inventories drop this aggressively, physical traders must lock up massive amounts of working capital just to secure baseline inventory. Every dollar spent panic hoarding crude is a dollar drained from the broader liquidity pool, choking out mid-tier merchants. 3. The stagflationary dollar trap. This energy shock is creating a brutal macro loop. The surge in oil prices to multi-year highs is heavily fueling global inflation fears. Because inflation is roaring back, the Federal Reserve is forced to remain hawkish, preventing the rate cuts that commodity bulls were hoping for. This keeps the U.S. dollar exceptionally strong, which is exactly why we are seeing base metals like copper plunge to 3-week lows today. A strong dollar combined with exorbitant energy prices crushes emerging market demand, creating a classic stagflationary environment, where global trade slows down but the cost of executing it skyrockets. The TradeFlow take. The U.S. blockade is no longer a negotiating tactic. It is the new baseline for global trade. As long as the strait remains a bottleneck, expect physical supply to tighten, dollar-denominated trade finance to shrink, and massive volatility to become the daily standard. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.